It's a big transaction worth 1,000 crore rupees. The country's largest lender, State Bank of India, has sold some of its stake in the National Stock Exchange. Remember, it had 15% stake in total along with its subsidiaries, and 5% has been divested for 911 odd crore rupees. Ritu Singh joins us with more details on that. Ritu, tell us the entire valuation. Of course, NSE definitely has been ramped up in terms of valuations, and SBI has got a good price for NSE shares.
Absolutely. NSE valuations have been ramped up on the back of its proposed initial public offering. But of course, State Bank of India today has sold about 5% stake that it held in the National Stock Exchange for about 911 crore rupees to Veracity Investments. Post this transactions, SBI stake, which was about 10%, will come down to 5.19%. And SBI Caps, one of its subsidiaries, continues to hold about 4.33% stake in the NSE. The transaction values National Stock Exchange at about 220 crore rupees. This, remember, compared to the IFCI transaction which happened at NSE last month, puts a premium of 2.5% at which SBI has been able to strike this deal at a share price of 450 per share. The stake sale, of course, is part of the bank's ongoing strategy to raise capital by exiting its non-core businesses. In fact, the bank had said it would raise as much as 3,000 crores this year by divesting its stake in various non-core assets. One of these, of course, is NSE. It still continues to hold some, stake in NSE. Perhaps it may look to exit that once the IPO actually happens. The current capital adequacy of State Bank of India stands at about 13.12% as of March 2016, and that may go up post this transaction given the cash that will come into SBI's kitty.
All right. Thanks for that, Ritu. Of course, we have the Managing Director of SBI, also Rajnish Kumar, joining us on the phone line with more details. Mr. Kumar, good to have you on the show. It's a good price that you've got for your stock in NSE, and you've got a fair bit of valuations, that is 4,050 odd rupees per piece, which is a good valuation, a ramp up from what IFCI had sold their NSE stocks at. So the buyer is Chris Capital. Could you confirm that? And also, could you tell us what is the way forward for the rest of the 10% stake that you have in NSE?
We will decide at the appropriate time when the IPO is done. So it is a gradual process, and bank management will take a call when to divest further.
So it's mostly in the IPO process that you are waiting to get the rest of the monetization done from your NSE stake, Mr. Kumar?
Sorry, I could not get your question because voice is breaking. Can you repeat, please?
Yeah, sure, no problem. Mr. Kumar, so you're looking at divesting the rest of the 10% stake with SBI in NSE at the time of IPO. You think you'll get better valuations than what you have clocked in right now?
I don't think we have taken that call. What I'm saying is that it is a gradual process of divesting. Partly we have divested, and partly we will be divesting at the appropriate time. It could be at the time of IPO, or it could be after IPO.
And Mr. Kumar wanted to know, of course, 911 crore rupees is a drop in the ocean for State Bank of India in terms of the non-core asset sale that you are planning to do every quarter. But what are the other plans that you have in the near future of divestments?
No, there are many non-core investments, so all the options are being evaluated. And wherever we see that we have realized the value or the targeted price, so we would like to gradually divest and with the profits.
Mr. Kumar, hello, this is Ritu Singh. So first question, your capital adequacy is currently about 13.12% as of March 2016. Post this transaction, when you get about 911 crore rupees through the stake sale, how much of a tier 1 benefit will you get?
I'm really sorry because this one, there is a lot of disturbance in terms of the signal. So
I'll repeat the question, sir. How much will your capital adequacy ratio be bolstered by? Currently, it's at 13.12%. Post the completion of this transaction, when you get 911 crore rupees?
This one I have not just got the figures readily available.
Okay.
And because as you have already said that it's not a very large amount. So impact on capital adequacy may not be very significant. You can make it out clearly that in relation to the capital of the bank, this is not a very large amount.
So also, when we last spoke, even in the AGM, it was mentioned recently that the bank would raise about 3,000 crores through divestments and non-core assets. As we were asking you earlier, one of course is NSE, where you held 10% and now you've divested 5%.
Right.
What are the other non-core businesses that you're looking to sell in this calendar year? Also, you've still not factored in your real estate investments as part of your Tier 1 capital. Are you likely to take that exercise during this quarter or in the next quarter?
No, as I said, that as and when there is an opportunity to divest at the right price where we believe that it has realized the full value in terms of its potential price rise or this thing, so we divest. Another thing is that as far as capital adequacy is concerned, we have adequate capital and real estate valuation is going on, and 45% of that can be added to the capital. So whether we will do it or not do it, it will all depend upon the requirement for the capital also. Because the risk-weighted assets of the bank, they have not grown at the pace at which we were expecting. The risk-weighted assets have grown by just about 8.5%. So just raising the capital and then keeping it idle is also not a good idea in terms of generating the return on the capital. What it does is that whatever non-core assets we have and the value which we have in the real estate, that is a good cushion, and as and when needed, we will take a call and take a decision.
So could you list out these non-core assets that you're looking to exit, please?
No, I can't name that.
All right, Mr. Kumar, this is Nisha joining in from the studio. There's one more information that was flashed today, of course, about SBI and Reliance Industries and the payment bank tie-up. What are the big plans over there, and what is the benefit that this joint venture brings to the table for SBI?
Right. So we signed the shareholder agreement. As you know that we have decided to partner with Reliance Jio for their payment bank venture, and bank is intending to take 30% stake. So payment space in the country is changing very fast. And as far as SBI is concerned, wherever there is a issue regarding technology or what are the latest developments which are happening in the payment space, we have been keeping abreast of it, and we have been adopting the best technology. So in the payment space, by entering into a joint venture agreement with Reliance Jio, one is, of course, we will be keeping a watch on what all happens in terms of technology. The other benefit is that the payment bank, the activities which they can do is very limited. And this provides big opportunity to State Bank of India to tap those customers also for their banking products and services, which currently payment bank is not allowed to do. So because suppose they are able to take only deposits of 200,000 rupees, and that too in savings bank. So there will be opportunity for, if these customers, they graduate above that limit, or they want a fixed deposit, or they want a loan. So there are huge opportunities in the entire payment ecosystem for a collaboration, and a successful collaboration where both the joint venture partners and the new payment bank, they all benefit. It should create a win-win situation for everyone.
All right, Mr. Kumar, thanks so much for joining in and spending your time with us and giving us all those details on the two news developments at State Bank of India today.